Hello everyone, welcome to today's session. So today we are going to continue our chapter number 4. Very important, very crucial chapter for you to understand. Reason because we are understanding risk assessment and internal controls. The very important part in any audit, risk assessment, internal controls. With respect to the previous session, do you have any doubt, like any questions with respect to any of the part that we have already discussed yesterday or in previous chapters, anything with respect to any of the part? Before I proceed ahead, anyone? No? Okay. If no doubts, then we can proceed ahead and we can start the discussion on the rest of the portion that we have for the chapter number 4. Okay. What we have discussed till now, we discussed with respect to the what is risk assessment, how materiality is important in case of a risk assessment. Like when we talk about materiality, what is the materiality basically, how it is important? Okay. Then we discussed about that in case of a risk assessment, how do you perform the risk assessment in actual, what is, what are the things which are involved in a risk assessment, like how do you analyze the risk, how do you understand the risk, the business process. We discussed some of the portion with respect to the flow chart, questionnaire, checklist, the way to gather the information. A lot of things we discussed about the examples, materiality benchmark to understand the risk. Then we understood about the various parts like risk assessment, risk reporting, and risk response with respect to that. Now what we are going to do is, now we are going to do a deep dive under the or in the internal control section. Okay, we are going to do a deep dive with respect to the internal controls, components of internal controls, framework of internal controls, a lot of things with respect to the internal control. Now, like we have discussed what is internal control in past with an example also. We also took an example of umbrella. Remember, umbrella one was there. We understood what is internal control with the help of a flow chart, three-way match, a lot of things we discussed at that point in time. Now we are going to discuss about the components of internal control. Can anyone tell me which are the components of internal control? Which are the components of internal control? Anyone? Components of internal control. What do you think? Which are the components of internal control? No? No one? See, components of internal control, why it is important and why we need to understand this component. It's we it's very very important part. When I talk about components of internal control, we are talking about understanding of the internal control, because internal control system is not just one control that is done and matter over. No, there could be multiple type of internal controls, there could be multiple things which are involved in the internal controls, and you need to understand all those things. Okay, so when I talk about components of internal control, these are the components which can help you to understand how and in what way the internal control is designed, structured, and how it plays an important role. See, when we discussed in a particular example, I'll go to the notes back. Okay, here we discussed some particular example in a particular scenario, that here we have a three-way match. Information is coming, information is flowing, there is someone to authorize, there is someone to do something, some documents are coming from some places, some information is coming from some places. So internal control is made up of some elements in this. Let's take a three-way match. Okay, Now tell me, what do you think if I talk about three-way match control in this particular scenario, in this particular example, can you tell me what three-way match control is doing? Like, for example, we have that three-way match control is bringing up some data and then matching it. But if you see that particular three-way match control, it has some expect. For example, from somewhere it is getting some data. Someone is matching all the three items. Okay, somewhere the control is getting the data. Somewhere the control is matching all the three items. Then somewhere the control is triggering the point. Okay, the things are not matching. Please check. This is some issue is there in this particular invoice, PO, or GRN. Or you can say that this control basically has few things in it. It's not only just three-way match. Things come, go. Things come, match, and go. No, he knows the control is specifically aware about from where the things are about to come, what are the things that are about to come, for example, PO, GRN, and everything. So it's not like the case that you can give any PO to this particular control. No, the PO which is relevant to the GRN, the PO which is not closed, open PO. Okay, so there are not many things involved in this. So this control already has some information in it based on which it is working. And the way it is designed based on the components. It is designed and it has some components. Okay. Can anyone tell me now, like based on this understanding, what components do you think this control has? What components do you think this control has? Anyone? No? Okay. No issues. I'll explain with an example that what components I'm talking about. See, if I let's break down this particular component. Okay, let's break down this particular component. Now, first of all, the basic thing that which is there in this control is someone decided to have this control. Someone decided to have this control in place. That means someone wanted to verify that no. Without verification, three-way match, without verification, things should not go ahead. That no payment should be rushed. No payment should be, passed, or, no payment should be issued without verification. So someone thought about this control, this structure, that data should come from here, data should come from here. Someone designed this structure. Okay, there is a structure in place. Now, this structure that I'm talking about, okay, is the first element. This whole structure is your first element of internal control, which is the control environment, which contains a lot of things like how the whole overall structure is decided. This, if I talk about this overall structure, is nothing but your first internal control component, that is a control environment. That someone thought, no, we should not proceed till that time all the documents, all the things should be met. Then only we will proceed. That's the control environment. Okay, that's the control environment. For example, integrity, ethical values. So because of the integrity, because of the ethical values, management thought to have this control. Tone at the top, this is nothing but the tone at the top. They want that everything should be checked, everything should be verified. Tone at the top. Okay, that's the first thing, control environment. The first and foremost part where you have rest of the components. Okay. Now, second, why this was created. The second component of the internal control is the reason to have this. One was the tone at the top, the control environment, everything together. They wanted, okay, there should be a environment from where the things should flow and everything should be there. Second is to prevent the risk. There was a risk, this fictitious payment. Remember, there was this particular fictitious uh, payment to fictitious purchase. This risk was there. Now, to address this risk, we had this particular control. The second and very important part is risk assessment. Why risk assessment? Entities risk assessment process. You cannot have a control randomly anywhere. Okay, where you don't need. For example, let's say three-way match control is there. After that, after three-way match, everything is done. You enter a control. Okay, let's verify the purchase order again. Waste of time. It's not that it should work like, okay, you can have any control at any point in time. For example, purchase order verification at the time of payment doesn't make any sense. So each and every control is designed to respond to a risk that we understood in last session. That each and every control is designed to respond to a particular risk. And this control toward this particular risk is nothing but is addressing the risk. So entity's risk assessment process is something which is embedded in your control. Because of that, you have this control at this particular place. So this is known as a risk assessment process. Risk assessment is your second component. Okay. Like management doesn't want to pay fraudulent invoices. They know there is a risk that the fraudulent invoices might be paid. That's why they have brought the second component. That's why this second component is very important. In front of the risk, you have a control. Remember the risk control matrix? Okay, that is the second part of your internal control. That each and every internal control is associated to a risk. Without a risk, you cannot, you don't need a control. It is not a control, it's a waste of time. Third, control activity itself is the third and the important element or the component of the control environment. Internal control, basically. So, control activity, the thing which is being done, the matching itself. Okay, this matching is your basically the third component, the activity, what you are doing. Whatever you are doing is the third component, the doing part. One is the whole environment, the setup. Second is the risk in front of which you have the control. Third is the activity which is being done, the doing part. This one is your third component. Okay. I would say control activity. Can anyone tell me which is the fourth component of the internal control? Which is the fourth component of internal control? No, no, Sanjay. No, fourth component. Very good, Hetal. Yes, very good. Yes, Hetal. Okay, the fourth and the important component is the data information. See, the information is coming to this particular control. This purchase order notice, goods receiving, tax invoice, everything. This is information or not. This information is getting in this control, is going into this control. Without this information, can you, like, okay, you have the design, but can you operate the control if you don't have the information? No. Integration with the ERP, where PO is created, GRN is logged by the warehouse upon delivery, and the invoice is later entered by the accounts payable team. Information part. The system, okay, the system links these three documents, provide the necessary information for the control to function. Yes or no? So the information is the fourth component, and along with the information, you have communication. Communication to all the employees, the kind of employees. Like, if, for example, it's control. In this control, let's say you get a sample, or the control gets a data where tax invoice is not matching with the receiving report or GRN. Let's say, for example, you are operating this control. You got a tax invoice which is not matching with GRN PO. What you will do? Simple, straightforward question. When you get a tax invoice which is not matching with the GRN and PO, what this control should do, or what you will do at that point in time, if you are, like, running this control? Anyone? Pretty straightforward. What you will do? I'm saying you get an invoice which is not matching with PO and GRN. Will you process that? We will communicate. Yes, very good, Chitra. We will communicate to someone that we have received a tax invoice which is not matching with the PO or GRN. Sorry, we are not going to process it. Please have a look into this. Please provide us either the correct documents, or let us know why there is a difference. Simple. Okay. You will communicate this to someone in your organization. For example, to your manager, to the team who is providing the data, or let's say, for example, if they are providing the reason for the differences, you may go to a higher, person in the organization to, let them know, okay, this is the reason because of which PO, GRN, and invoice are not matching. What should I do? So either you will communicate ascending or descending way, wherever it's required, but you will communicate if you get issues. So clear procedure, okay, is available to all the employees when they are operating a control, when they're part of the control. Let's say, for example, if the accounts payable clerk finds a mismatch, there's a clear communication channel to follow, either with the procurement department for the price discrepancy, or for the warehouse for the quantity discrepancy, or let's say, for example, with the supplier for the invoice discrepancy. To resolve these issues, he will communicate. The accounts payable clerk will communicate. And that is the fourth element: information and the communication. So the things coming and going out from the control is the very important part. It's a very important component. Okay, so this arrows, if I talk about these arrows where the information is coming, is your fourth element. Is your fourth element: information and communication. Last, and you can say ongoing part, ongoing element, or ongoing component of internal control, is your monitoring of controls. That someone on a periodic basis reviews everything is going good, the control is working fine or not. A review on the controls, you can say. For example, a supervisor or manager from the accounts payable department will periodically review the work of the people who are operating three-way match control. He will pick up a few samples of the invoice to ensure that the three-way match control is operating effectively. Not only the auditors, but the management will also do that. And when the management checks the operating effectiveness of a particular control, it's the fifth element, monitoring. Otherwise, how they will come to know that they need to change the control, they need to change the environment, they need to change the information, they need to change the activity. So ongoing monitoring is one of the very important part where they identify what changes are required to be made to a particular control. Yes or no? So the overall monitoring again of the control environment is nothing but the fifth element, monitoring of control. So that is your fifth element for the component of internal control. To summarize, five components, very important, five components of the internal control. We'll quickly summarize internal control components. Okay. The first component was the structure, the overall business process. Okay. So that we call a control environment. For example, in this particular example, if I just have three-way match, if I just have three-way match and I don't have all these things, like all this process is not there, only three-way match. Do you think it is what you can say reasonable or logical to have just a three-way match control where rest of the process is not there? Like just a three-way match for no reason. No. So overall structure is required. Otherwise, there is no point of a particular activity. That is the first part, control environment. Second was very important was a risk assessment, because in front of each and every risk, you have a control. So without risk, you cannot have a control, basically. So risk assessment is the second part. Third is the activity itself, control activity, whatever is being done. Fourth is the information and communication that is received in the control. And fifth is the monitoring of the controls. Okay. This is how the internal control is designed. If any of the component is missing, you can't have an internal control. You cannot have an internal control. That is for sure. Clear? Any doubt? Any doubt with this? Any doubt? No? Okay. Let's go to the study material. From there, we will go through the components of internal control. Okay. So, as we discussed, control environment, entities risk assessment process, control activities, information and system and communication, and monitoring of the controls are the important, very important five elements or five components of internal control, from which you can say the control has been designed appropriately. If you have these five things, your control is good. And this is necessary. Okay, so first part, which is their control environment, as we already discussed about the overall structure, the integrity, the tone at the top, okay, which is there. For example, why someone would like to have this process? What is the reason? Why they want to involve people? Why they want to, create such kind of a process? Or if they are creating the whole environment they are creating, I cannot have a control just a control for sake of a just a control. I need the whole process, then only it will make sense. Okay. So participation by those charged with governance, because they are the one who will design it. They need people competency to run this particular control management philosophy, with respect to, like, okay, we are of a kind of a, like, for example, management philosophy is something as a tone at the top, structure, organizational structure, because it can involve, let's say, for example, if a control, like, this is a three-way match, like this way you can have a multiple different controls in an organization, so your organizational structure is involved, like procurement team, like one side on accounts payable team, one side your vendor team, some different teams are involved. Over there you have a responsibility assigned, and in the overall structure, you have defined like what who will do, what will be the responsibility of which person. Then the risk assessment process, the second one, because without risk you cannot have a control. Okay. So the risk assessment process, for example, you will, like, very important part is that, what are the risks which are involved into a particular business process. Once you design the environment, you identify a risk. It could be regulatory risk, it could be information system related risk, it could be risk arising from the personnel itself, or a lot of things are there. So various type of risks are there that you need to consider when you will be designing a control. So control, then the control activities, actual activities. For example, performance review. Okay, so someone is performing a review. Information processing, someone is processing the information. Physical controls. Sometimes the controls are physical. For example, simple password related, security related, physical controls. Again, it is not necessary that all the controls should be within the system, like on the paper. No, sometimes you can have a physical controls. Then you have a segregation of duties, type of, again, activity. These are the type of activities that you can have within your control. Then information system that we have already discussed. uh, Communication and information is a very important part, that to and fro, and the monitoring of the control, that someone is monitoring that the overall all the relevant components, all the relevant parts of the component are working appropriately. Okay. So this is what your components of internal control are. Any doubt? Okay. If no doubt, then we have already seen the technique for the evaluation of the internal controls. For example, when we want to evaluate a particular internal control as an auditor, either we will use the questionnaire where we'll correct information based on the questions which are mentioned, or we may use checklist. Remember, financial statement closure procedure, or financial statement closure checklist that we have discussed, or a flow chart. Just now we were discussing again an example of a flow chart. So flowchart basis, we will, we may gather the information. Now, once you have the information, you will then evaluate the control, how it is designed, how it is placed, how it is structured, all those things. So, examples are given here. So this is how you will evaluate the internal control. Now, very important part that I want to specifically discuss, okay, is the various frameworks of the internal control. Now, what are these frameworks? Can anyone tell me what are the frameworks of internal control? What are the frameworks of internal control? Can anyone explain? Why we need a framework? Anyone? Why we need a framework? Why do Like, what is the need of a framework for the internal control? What is the framework? Anyone know? So that we can know what minimum requirement should be met. Okay, yes, very good. Yes, absolutely correct. Yes, very good. So, minimum requirement when we talk about. Now, what is this minimum requirement? Remember the components of internal control. That's the framework. That to have a minimum, appropriate internal control, you need five components. That is a framework. Like till that time, if let's say for example, someone comes up, no, 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 I feel this sixth component should also be there. So you have a different framework which says that no, these are the minimum requirements that you should have when you are building a good control. So the currently that one we see, or you can say the one we are discussing, is the COSO framework. Like it is divided into the five components category. Okay, so if I talk about the internal control framework, there are multiple frameworks. Okay, so the framework that we discussed of the five component part, it's nothing but the based on COSO, that you have a control environment, risk assessment, control activities, information and communication monitoring. Okay, so it says that no, 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 no. COSO is the framework which talks about five components of the internal control. Based on that, based on this framework, I am talking about okay, what are the minimum requirements for an internal control? Yes or no? So based on this, like various frameworks, we understand how and what are the different components of the internal control which are required or which are at minimum needed to design a good controls within the company. Okay, apart from COSO, like COSO again, like uh, been there, like it has a very good it has a very good journey when I talk about COSO framework. So COSO framework for internal control was, it was announced in 1992, and since then it has evolved in multiple things. So it is very, I would say, it has a very long journey when it comes to the till today when it comes to the internal control. But apart from that, we have other internal controls framework also. For example, we have a COCO, criteria of control. We have COBIT. We have different kind of internal control framework designed by different entity, like these standard issuing bodies. Plus sometimes your laws or regulations also provide what are the minimum components that an internal control should have. Okay, so what are the minimum components that your control should have that is there in the law or the regulation? Can anyone tell me such law or regulation where you think, okay, these things are defined, like what should be the minimum requirement? Any law that you might think of, okay, no, no, in law also we have read that how the control should be designed. Anyone? Okay, Sanjay, very good. Okay, Ayush, yes, good. Very good, Mega, yes. Any other law or regulation that you think, no, no, we have read in that law that we need control in this particular way? We need the control in this particular way only. No? Okay, so someone of you is saying SA 250, hedging in FEMA, professional ethics, like very good, Mega. You have said IFC, yes, internal financial controls. Okay, as per the Companies Act, one such area where the law says to have a control on the financial reporting process. Okay, but whether it defines like how to have a control, no, it says that auditor has to report on it. Okay, in case of an IFC, auditor has to report on the internal financial controls over financial reporting. But how, what to report, what to do in that, the act is silent as of now. Yes or no? The act is pretty much silent on that. Hence, we have a guidance note issued by the ICAI on the ICFR, like IFCFR. Basically, what this guidance note does, it talks about how the controls should be there. So you can say this guidance note is also an authoritative pronouncement which talks about a control framework. It's also a control framework, yes or no? That says that okay, how a control should be designed, or basically it helps you to understand okay, this is how the control should be designed, and you should test in this particular way. So the guidance note issued by the ICI over the internal financial controls over financial reporting is also an internal control framework. So it talks about the essential components of internal control under, which the internal control should have. Are you getting the point? Plus, in a similar way, you have a, like, I'm not sure how many of you have heard about, but there is a Sarbanes and Oxley Act in US where it has a section 404. We call it SOX 404 reporting. Okay, where in that SOX 404 reporting, companies and the auditors are required to report on the internal controls established for the purpose of financial reporting. Okay, so again, that is one of the area, you can say one of the kind of a semi codified framework that we have for the internal control. Again, you have a guidance note by the PCOB on that, and a lot of things are there. So those are also there. But yes, we already have some frameworks. Now there is one good question. The guidance note itself is based on COSO and other frameworks. See, again, now when I talk about a framework, it can be based on other frameworks. It can be a combination of other frameworks, not an issue. So when you see a COSO has evolved a lot. It's not the same that was there in 1992. After that, it has evolved. The dimensions have come into the picture apart from the control. In 2013, there was a very, very good, amendment in that COSO. uh, then there was a COSO ERM which was issued. A lot of things are there. So it's not like that, that, okay, it is based on the COSO. No, it's not like, sometimes some things are relevant from the Indian perspective, some things are not. So those things are taken up and, in guidance note, the guidance note are appropriately defined the things which are applicable from the Indian perspective. So this is how, we can say that it is a framework. Are these international framework applicable on audits in India? Very important question. Now the question comes is like, like you should ask the question, when you are testing an internal control, why you are testing? As an auditor, if you are testing an internal control, why you are testing? For what reason? Are you testing for the company set? If you are testing for the company set, then you need to follow the guidance note. If you are testing like any which is, if you are a chartered accountant in India, okay, if you are auditing as per the standards, you have to follow the guidance note. So over there, you need to follow the framework which is given in the guidance note to evaluate the internal control. But when it comes to the that management wants to establish the internal control, they can follow any framework. They can follow COVID also, not an issue. Because at the end, when they will prepare based on the COVID or any other framework, the outcome is pretty much going to be same. That the controls are going to have these fundamental things which we require. Okay. So these international frameworks, when it comes to the creation of internal control, management can follow. And most of the times management do follow. But when it comes to the audit, you have to follow the guidance note. Any doubt till now with respect to the internal control frameworks? Any doubt? No? Okay. If no doubts, then we will discuss now very important part with respect to the internal control itself. Communicating deficiencies in the internal control. Can anyone tell me which standard do we have on the communicating deficiencies in the internal control? If you want to communicate deficiencies in the internal control to management and those charged with governance, which standard do you follow?
SA 265.
Yes, very good. SA 265. Okay. So that is the standard we follow. And that we will understand what are the deficiencies in the internal control and how we need to communicate it. But before that, I think I have a question over here. The question is, what if a guidance node is in conflicting with some international framework? I would not say there will be a conflicting. See, when I talk about minimum components, when you can say a conflicting situation, when someone says that, okay, this should be there, and someone says that this should not be there, that's a conflicting situation. But when I talk about internal control frameworks, most of the time they will prescribe these are the minimum components, these are the minimum components. Guidance will say minimum components are ABC, international framework, whatever you want to say is XYZ. Now you have to match whether the ABC, whether the XYZ includes ABC or not. Simple. It should not be the case, it will not never be a case that, international framework will say don't have XYZ. No. It will say minimum required ABC. It will never comment upon what is not required to be there in an internal control, like XYZ. So these kind of conflicting situation cannot be there in the frameworks. Am I clear? Any doubt? Any further doubt? Okay. So we need to now understand SA 265. Very important. Communicating deficiencies in internal controls to those charged with governance and management. When we talk about this standard, we need to understand few things first. Number one, deficiencies. What is a deficiency in internal control? Can anyone tell me what is the deficiency in the internal control? Like the term deficiency. Can anyone explain the term deficiency over here? Anyone? The term deficiency. What do you mean by deficiency in internal control? Very important. The term deficiency.
Control is ineffective.
Okay. Control is not effective. Yes. What else? Something which should be there isn't present. Yes. Very good, Chitra. When the control is not effective. Okay. See, when I talk about deficiency, I have a term. We are using the term deficiency. Okay. Ineffective design, or something is missing, or something is not effective. Perfectly fine. Why I am not using the term misstatement over here? The second question is why I am saying deficiency, not misstatement. Why I am not saying communicating misstatement in internal controls? Anyone? Why I am saying communicating deficiencies? Why I am not saying communicating misstatements? As an auditor, I should be worried about misstatement, yes or no? But why I am going to the deficiencies? Why I am using a different term? Why can't I use a term misstatement?
So due to management override of controls.
Nope. Nope. Mm, somewhere, okay, Sanjay, your answer is like, not appropriate, but yeah, near to that. Very good, Chitra. Absolutely correct. See, it's not just, I want to improve my vocabulary and that's why I'm having different term. No, it's not the case. The reason is that internal control is designed to prevent and detect misstatement. If the internal control does not work appropriately, it, by default does not mean that you have a misstatement. For example, in a lot of organizations, small entities, you will find that there is no internal control at all. For example, OPC. You might have already heard what is a OPC company, one person company. Over there, director, shareholder, everything is one person. What controls they can have? So basically, the controls will be having issues. They will not be effective. Now, if I say control is not effective, that means they have a misstatement by default. There will be huge misstatements. Answer is no. Because the nature, the size, and the complexity of entity is not that much, they might not require internal controls. They don't have that much good internal controls. So there are deficiencies in an internal control. I agree. But that does not mean directly that you have a misstatement in your financial statement or misstatement in your books of accounts. So deficiencies is not equal to misstatement. Yes, deficiencies will lead sometimes to misstatement, but not every time. Deficiencies can result into misstatement sometimes, provided, if other things are also there, but not every time. So, in that particular case, deficiency, we are using the term deficiency. That is, when I talk about internal control, it is designed to prevent and detect misstatement. And the deficiency exists when a control which is designed, implemented in such a way that it is not able to prevent, not able to detect or correct the misstatement that it was supposed to do on a timely basis. That is very important. On a timely basis, then there is a deficiency. So, for example, I have a three-way match control. The purpose of three-way match control was to prevent someone from paying to the fictitious purchase. Yes or no? The purpose of the control was to prevent someone from paying to the fictitious purchase. Now, let's say if the control is designed in such a way that it is not able to prevent that, or the control is not operating effectively, the person who is doing a three-way match is not paying attention. He is also matching the invoices which are not getting matched, so he is not able to understand the control. So the control has a deficiency. Okay, it is designed or implemented in such a way or operated in a such a way that it is not able to prevent payments to the fictitious purchases on timely basis. That's a deficiency. Clear? So deficiency means the definition as per the standard itself also, the deficiency means the deficiency in the internal control exists when a control is designed and implemented or operated in such a way that it is unable to prevent detect correct misstatement in a timely basis, or a control which is for the control which is necessary to prevent and detect and correct misstatement in the financial statement is not able to do that, and the control is itself is missing. So the control is missing. In the first place, I'm saying that okay, control is there. Okay, control is there, but designed and operated or implemented in a way which is not able to prevent. In second case, I'm saying control necessary is missing. So in both of the scenarios, you have a deficiency in internal control. Now, when these deficiencies accumulate and are of such nature that they are very important from those charge governance points of view, they are significant. Okay, deficiencies or combination of deficiencies, you think in your judgment that require attention of those charged with governance will be called as a significant deficiency. Okay, so deficiency in the internal control and significant deficiency in the internal control. So multiple deficiencies together or one single deficiency in your judgment that you say that no, this should require the attention of the those charged with governance or audit committee. Now a simple example, let's say there was an invoice of 1,000 rupees, which somehow they missed in three-way match. Like it was not matching, but somehow they matched it and they processed it. 1,000 rupee invoice in front of a company which has transaction in crores, they somehow match the 1,000 rupee invoice in three-way match. That was only the one observation that you identified or deficiency you identified in internal control of three-way match. Will you report that to audit committee? Will you go and schedule a meeting with the audit committee to discuss this point? No. Yes, we will not. No, it's not significant. Yes. So your answer, you in your professional judgment are only saying that it's significant or not. So when you say yes, it's significant, it becomes significant deficiency. So that's the judgment is required to define a deficiency as a significant deficiency or not. Clear? Are you clear with these terms? Deficiency and significant deficiencies, and why we don't have a term misstatement over here? Yes, no? Okay. Now we understand the objective of this particular standard. The objective of this standard is that auditor has to communicate appropriately to those charged with governance and management about the deficiencies that they have identified in the internal control. Okay, and if they like, I will only inform to those charged with governance if they are significant deficiency or sufficient important to merit to their respective attentions. See, I may inform all the deficiencies to management, but I will only inform the significant deficiencies to uh, you know those charged with governance, because those charged with governance we will provide only significant information. Okay, Ayush. So let's say, for example, I'll explain the significant part again with an example. Let's say there is a invoice of 1,000 rupees, which was not matching in with PO. PO was, let's say, PO amount was rupees 950, but the vendor sent me an invoice of 1,000. This invoice was processed and paid. When I say process, this process was done after verification of invoice in three-way match control. Okay, in three-way match. So that means this three-way match control had a deficiency. Okay, this three-way control had a deficiency. Deficiency is this one. This invoice was processed. Now let's say this is the only deficiency. This three-way match control had this only deficiency, one single deficiency. Now, will you inform this deficiency to those charged with governance? Will you communicate this deficiency to those charged with governance? Now, I will give you some numbers. Total invoices processed in year, let's say of rupees 250 crores, and in quantity I'm talking about are, let's say, 75 lakhs invoices in quantity. I'll remove this. So quantity is 75 lakh invoices valuing 250 crores. Would you go and discuss with those charged with governance about this one invoice which was of 1,000 rupees, where you have a PO of 950, and there was, like, after three-way match it got still processed? Will you communicate
No,
this
sir.
deficiency?
No.
No. The reason why? Immaterial,
Immaterial.
not significant, not their worth of attention. Yes or no? So this classification, insignificant, immaterial, insignificant, not worth of their attention, is the classification that you need for the significant one. For example, if I now increase the amount, let's say, instead of this 1,000 rupee or this 950, I'm changing it. Now let's say the invoice is of 10 crores, where the PO amount was only of 5 crores. Will you go and communicate?
Yes, sir.
Invoice of 10 crores where the PO had only 5 crores.
Yes, sir. Material.
Material also, but a very big, significant transaction which was missed from the internal control. So based on the materiality, based on the other factors, you say that no, this transaction should be reported to those charged with governance. So this is a judgment you made. Just now, based on your judgment, you decided to report this transaction. This is a professional judgment. And based on this professional judgment, your decision, based on that, the moment you decide, okay, I will report this matter to those charged with governance, it becomes significant. So the definition also says that when a deficiency, single or a combination of deficiency in the internal control, that an auditor's professional judgment is sufficient important to merit the attention of those charged with governance. When you think I should report this matter to those charged with governance, becomes significant in your professional judgment. Now, your professional judgment can be based on multiple things: materiality, complexity, a lot of things can be involved. That is your judgment, professional judgment, as an auditor's professional judgment. Clear? So, what is a significant deficiency in internal control? Now, the objective, and if I talk about the objective is pretty much straightforward. Report the matter to the management and to those charged with governance, which are they're relevant. Okay. So you need to report the matter to them. That's it. Nothing else. Nothing complex in this. If you see the requirement of the standards, it's pretty much simple. It says that the auditor has to determine that what deficiencies he has identified. Then he has to determine whether these are significant deficiencies or not. If significant deficiencies, then have you communicated to those charged with governance on timely basis? Okay. You need to also communicate the deficiencies to the management in writing. So, for example, if there is a significant deficiency in internal control, then auditor has to also communicate that to those charged with governance or to management also, both. So communicate to management and those charged with governance. And if there are other deficiencies, okay, then do you want to communicate to the management or not? Understand that. And then once you decide whether to communicate or not, communicate. Provide a description of particular deficiency. Okay. You provide a description, you provide sufficient information, you provide that whether it will affect the opinion or not. Let's say, for example, if you are going to issue an opinion on internal control, if you are going to issue an opinion on IFC, this will impact the opinion. Okay. So whether it will impact the opinion or not, how it will impact the opinion on financial statement, not on the internal controls, but on the financial statement. How they are going to impact the financial statement reporting process. A lot of things are there that you need to inform to the management and those charged with governance when you are informing about the deficiency. I will not only go and say that, okay, management, you have a deficiency. No, I need to explain to them about this deficiency. Like, okay, this deficiency is into the three-way match control. Now, I will explain them, okay, do we have any other control behind three-way match control which can, somehow reduce the chances of misstatement? It can be, complementary or supplementary control, complementary controls. Remember, there are some controls which can be complementary controls. That means they help the primary control. So if you have a complementary control, which is non-key control or which is not a significant control, you can say that no, three-way match was not working. I agree, but there is a control where the supervisor also reviews manually the invoice with only PO before processing. A complementary control. So although three-way match was failing, but there is another control which might have prevented this kind of scenario. So you need to provide all these information to management, like what is the deficiency, how it is impacting your opinion on the internal controls if you are going to issue, how it is going to impact the opinion on the financial statements and other information which are relevant from the management or those charged with governance point of view to understand the deficiency, why this happened, what was the reason, whether it is the reason is the design, whether the reason is kind of implementation, whether the reason is operation of this control, the control was not operated effectively or the control is missing altogether. So what is the basically reason of having this particular deficiency in the internal control? Clear? Any doubt with respect to the points we discussed? So if I quickly take you through the standard itself, it says that if you identified one or more deficiencies, okay, then check whether they constitute significant deficiency. If significant, then communicate in writing significant deficiencies. Okay. And also communicate to management like significant deficiencies and other deficiencies. Plus, when you are communicating in writing, provide a description, sufficient information to understand the context of communication, which may include like, okay, like purpose of audit, consideration of internal controls relevant to the preparation, matters reported are being limited to deficiencies, few things which are necessary in your communication. Clear? Pretty straightforward, nothing difficult. The only important part was this particular definition, deficiencies. Why deficiencies? Why not misstatement? Any doubt with respect to this particular part? No? Oh, wait. Okay. Now, when I talk about uh, 265, it is basically reporting. Okay. I have one question. So, missing one component such as monitoring of the controls would constitute deficiency? Yes. It will. For example, when I talk about monitoring, if there is no one to monitor the controls whether they are operating effectively or not, your reliance upon the control might decrease. See, missing component in the internal control will directly impact that how you are, taking that control, or how much you can rely on that particular control. So your reliance directly depends upon the component, and these particular components directly impact the design of the control. Now let's say monitoring is not there, but the control is still designed in an appropriate way. It is operating in an appropriate way, because not every time you need a change. Yes, after some years or few years you need a change in the control, but let's say the control was recently designed, you don't need change so quickly. So in that case, yes, it could be a scenario where you don't have a component but still it is working fine. I hope I am clear. So deficiency could be there, could not be there, depending upon the type of the control, when it was implemented, what was the background, and all of things. There is one another doubt. So in the meaning of deficiency states that it is a misstatement. Definition states it's a misstatement. Where? So this is the deficiencies definition. It talks about the objective of the control, and if the objective is not able to meet, it's a deficiency. Where is the misstatement?
So misstatements in the financial statement on a timely basis. The word itself says misstatements.
That is objective. Again, see, what is the objective of internal control? To prevent or detect a misstatement. So this particular part, if I talk about unable to prevent, detect, correct misstatement in the financial statement on timely basis, this particular part is nothing but the objective of the internal control. Now, if internal control is not able to meet its objective, it's a deficiency. So this is not talking about misstatement. Rather, this whole particular point talks about the objective. You need to read this whole in together.
Okay.
There is another question. Should we report if the magnitude of the amount going through the control, which is not monitored, is very high, say 500 CR? See, you can, ask management, or you can inform management that the monitoring of the control is not happening, which should happen. It could be a deficiency. Now the question comes is it a significant deficiency? Deficiency, fine. You have a missing monitoring part in the control. Whether it's a significant deficiency. Now, when I talk about the deficiency, means deficiency was the control is not able to meet its objective. What was the objective of the control that you are talking about? Let's say the objective was to prevent fictitious payment. Whether the control is still able to prevent the fictitious payment, even after missing a monitoring control environment, is the control is able to meet its objective? If yes, then how can you say it's a deficiency? But why I still say a deficiency? Because today I know it is able to meet. Today I know it is able to meet. But the design is such that tomorrow or day after tomorrow it may not. So there is an issue in the design by not having a monitoring component. So at the design level, I may say that this control has a deficiency, not at the implementation level or the operating effectiveness level. So sometimes we say that design is has some deficiency, but still having the design, some deficiencies, it is implemented appropriately and operating appropriately. If it is able to meet the objective, yes, then there is no deficiency in the operation. So Again, see, when I talk about issue in the design, that will impact your risk assessment. Yes or no? So that will impact the risk assessment. Any further doubt, or do you have any further doubt, or are you clear with this particular part? Okay. So this was your essay 265 that we discussed. We discussed essay 265. We discussed a lot of components of the essay 315, internal controls. Now what we need to discuss is a very important part, very important and critical aspect when it comes to the understanding and performing the risk assessment. So once you understand the internal controls, once you perform risk by understanding the internal controls, by understanding the deficiencies, okay, by understanding the the business process, you understand what response you need to create now. For example, design good, it is operating good, so you understand the internal control. So internal control is working perfectly fine. At least they have a accuracy part of those invoices. You have, but still, as I said, completeness was an issue. Now to address the completeness, remember in previous session also we discussed that it may be a scenario that I address my, okay, completeness will not be there. I have some different control on that. A response is missing, means a deficiency. If these deficiency, I will create a response that I will do a substantive testing. That is a response to the risk. Either you decide to test some further controls, either you go and do a substantive testing. That is the response that you need to create. You need to design the audit procedures further to to understand what further risk is there. You then evaluate the risk. Let's say for example the first was to understand the three-way match control. I designed the procedure to understand the three-way match control. Fine, I understood it. Now based on that I identified some more risk: open grn, open po, completeness issue over the invoices. So I will design further audit procedures to test document, and I will basically create my whole auditing strategy accordingly for that particular area. Covered audit procedures. If you, let's say for example, other audit procedures to test further controls responding to the risk. With this part, any doubts, we can take up some questions to understand SA 315, whatever we have discussed till now, so that we can have a good understanding of the topic. So let's take some questions, and then with the help of questions we will basically understand this topic further. Just a minute. Okay, so here is the question. The question is, Mr. Anand Pal, audit manager on the statutory audit of Mountain Beverages Limited, Mountain Water and Beverages Limited, explained to his team that the auditor is required to perform risk assessment procedures to provide a basis for the identification and assessment of risk of material misstatement at the financial statement and the assertion levels. However, such a procedure will include only inquiries of the management and not of other individuals or functions within the organization. Inquiring with others within the organization will alert them and will reduce the chances of detecting fraud within the organization. Mr. Mukul, the engagement partner, had a different opinion. Kindly guide the audit manager and the engagement partner with respect to the requirement of inquiries under the risk assessment procedure. So you have the options A, B, C, D. Take a minute, read the options, and then tell me the answer. What do you think will be the correct answer in this scenario? Take a minute, read the question, and then try to answer. Okay, now tell me, what do you think is the correct answer in this particular scenario? Which option you will choose? Which option you will choose? Okay, very good, Chitra. Anyone else? Which option you will choose? No, it's not that much difficult. It's I think pretty much easy then, based on what we have discussed. Let's read the option one by one and we will discuss what is the correct option. So the option number one is inquiries of the management and of appropriate individuals within the internal audit function and of others within the entity who, in the auditor's judgment, may have information that it is likely to assist and identify risk of material misstatement due to fraud or error. Okay, that's the option number one. Inquiries with other within the organization will alert them and will reduce the chances of detecting fraud within the organization. Hence, auditors should not be within the entity and other conduct inquiries within the entity and other employees with different level of authority. Inquiries directed towards in-house legal counsel may provide information about such matters as litigation, compliance with laws and regulations, and knowledge of fraud. However, inquiries of employees with those charged with governance and towards marketing or sales personnel should not be conducted. If, based on the responses to the auditor's inquiries, it appears that there is no finding, then only inquiries of the others should be conducted. See, when we have discussed, like remember, we have discussed that when you want to understand the entity and its environment, we not only go to the management, we go to the various departments, we understand at the business process level, like who performs this process, who is the person who performs this kind of activity, who takes care for the grn, who takes care for the po recording in three-way match invoice. So we understood whole purchasing process. It's not the management, it is the inquiry we are performing with every employee. Now, if the inquiry is being performed with the every employee, then we should perform the inquiries, internal audit, others within the entity, who, in our judgment, may have the information that is likely to assist us in the identifying risk of material misstatement. So, we should conduct inquiries with everyone if they are relevant with respect to the financial statement or the business process. Yes, why not? Alerting them or excluding someone who might have an information is not appropriate. That's why in this scenario your correct answer is option A, not B, C, and D. Okay, so option A is the correct one. You should conduct. Clear? Any doubt? Okay, now second question we have in continuation is Mr. Anandpal wants to understand what can be achieved through inquiries of others within the entity and other employees with different level of authority. Kindly guide him. Now tell me what information you can get if you do inquiries with other people in the organization. What kind of information you can get? In which area it can help you? With some examples. So, which kind of information you can get by doing multiple inquiries with different people? Can you give some example? Anyone? So, for example, you may conduct inquiries like the way we have discussed with those charged with governance, that they will provide you how they have set up the oversight, how their financial statement are prepared, what oversight they keep on the financial statement. That is one part. Second, you can, do inquiries with the employees who are recording complex transactions, who are recording unusual transactions, who are involved in the financial statement closure process. They will tell you about the selection and application of those accounting policies, the complex accounting policies, complex transactions. They will tell you that, okay, how, they process those complex transactions, how the complex transactions are recorded in the books of account, what information they have, or how the financial statement are closed, financial statement closure procedure. Then you may have inquiries with the in-house legal team. Now, in-house legal team will provide you about the information about the non-compliance with laws and regulations, if they have identified any fraud, compliance with the ethical principles within the organization, any complaint, whistleblower, which is done. So all those things. Then you may have inquiries with the sales personnel, marketing team, to understand how the company is doing on the sales side, strategies, how this company's product mix is there, whether there is a demand, whether the demand has increased compared to the last year or not. You can do inquiries of internal audit function. For example, they will provide you what they have tested, where they think there is a risk, whether they have identified any fraud, or whether they have identified any misstatement, deficiencies in the internal controls that they have identified, a lot of things. Okay, you may do inquiries with the different people in the organization that they take care of for the respective area. So you may do inquiries with the procurement team to understand the procurement. You may do inquiries with the, different kind of people within the organization. So these are certain examples that, you can do inquiries, and this is the information you can get about. Clear? Any doubt with this? Any doubt? Okay, if no further doubts, then let's take a quick 10-minute break. After the break, we'll gather back and we'll continue the session. Let's take a quick 10-minute break. Yes. A few questions on the SA 315, basically inquiry. Let's discuss some more on that so that we can understand how to respond to the questions, how to write the answer. Okay. So there is one more question that I want to discuss is like in continuation to those that we have already discussed, that Mr. Mukund, audit executive, performed the ratio analysis to compare the trend in sales. Also, he performed a volume to sale analysis to understand the price trend. Mr. Anand Pal, the audit manager, was of the opinion that the analytical procedures are only required to be performed during substantive testing phase. Ratio analysis and the trend analysis during risk assessment phase are irrelevant as the base data is still unaudited and the audit team cannot draw any comfort from the analysis drawn from the unaudited data. Mr. Mukund, being not fully satisfied from the response of the audit manager, has reached out to understand further on performing analytical procedures during the risk assessment phase. Your role is to guide Mr. Mukund with respect to this. Okay, tell me. So, what will be the answer? Take a minute, read the question again, and then try to answer. Okay, so tell me what you will guide to Mr. Mukund. As per you, what Mr. Mukund should do? Should he perform the substantive procedures and the analytical procedure at the time of substantive procedure only? Or analytical procedures can be performed at the time of risk assessment? Yes or no? What you can say? So, do you think risk assessment procedures can be performed at the time of analytical procedures can be performed at the time of risk assessment, or they should only be performed once you are at the phase of substantive testing? Okay, very good, Mega. Very good, Sanjay. Now tell me, do you think it will create any issue if the data is still unaudited and the base data that I'm taking for the analytical procedures is kind of unaudited raw data? Do you think it will help me to derive a comfort, or it will help me to derive some trend, something like that, from that base data which is still not audited? At the risk assessment phase, the data that I have is raw data. I'm not sure whether that is the correct data or not. Should I perform analytical procedures? Yes, very good, Sanjay, very good, Mega. So when I talk about analytical procedures, so analytical procedures can help me to determine where the risk is there, the risk of material misstatement. Okay. Now, although I'm saying that yes, the data is raw, yes, the data is still unaudited, but still it can provide me a good overview of the overall picture or the analytical procedures or the trend that I want to see. See, I am not able to say that this particular data will provide me minute trends, which will be provided, this data will be able to provide me very small trends, but at least it can provide me high level overview, trends, analytical or information that will really help me to determine or at least to provide me a direction in which I should do further audit procedures or further planning procedures to get more information for the risk assessment. Simple example, analytical procedures. If I perform on monthly sales, it's an overview. It will give me some amount of understanding how the sales are flowing. Okay, it's a raw data, unaudited data, plus minus 5%, still fine, not an issue. But do you think it will be plus minus 50% on the data? Answer is no. If the data is so distorted that there is a plus minus 50% on that particular data, that means it's it is not a data. Basically, first of all, it will be a very big issue. It will be a deficiency in the process from where you have received that data. Okay, so having said that, plus minus 5% will be there. That is something we can verify at the later stage, but it will not change your overall trend. So overall trend and everything can be still received, can still be understood by using this data. Yes, you should not rely on this data or overall trend. Only you need to perform some further procedures. So let us see the answer also. So answer is, as per SA 315, identifying and assessing the risk of material misstatement through understanding the entity and its environment, the auditor shall perform risk assessment procedures to provide a basis for the identification and assessment of risk of material misstatement at the financial statement level and the assertion level. And the risk assessment shall include the analytical procedures. Okay. Now, when analytical procedures are performed as a risk assessment procedure, they may identify aspects of entity of which the auditor was unaware and may assist in assessing the risk of material misstatement in order to provide the basis for designing and implementing the response. So I'm not saying that it will help you to get the audit evidence at the planning stage, but it will help you to at least design your audit procedures. Analytical procedures performed at the risk assessment procedure may include financial, non-financial. For example, relationship between sales and square foot of selling space or volume of goods sold. A simple example I'll give you. You might have already seen a multiple stores out there, multiple chain retail stores, clothing stores, brand stores which are there. Okay, so let's take an example of a particular store which is providing clothing, apparel. Okay, that is a brand which has a multiple stores across the nation, XYZ. Okay, now this XYZ store provides you clothing and everything, all those things. So what you can do is you can do a analytics, which is space which is there for that particular, like number of square feet area versus sales. That will give you a very important metric known as a sale per square feet. Why this is important? Because in these kind of retail chain stores, it becomes very important to understand how efficiently they are performing with respect to the square feet wise. Number two, how good they are or correlated with the square feet wise. Reason, because the more the square feet they will increase in a particular year, the higher the sale chances are there for them. Let's say, for example, you usually can get an industry number of a sale per square feet for different kind of brands, different brands. You can compare, let's say, overall industry trend for sale per square feet in this category is, let's say, rupees 1000. Okay, per square feet. The rate is going on 1000 per square feet sale. Now, the number that you get by performing analytics in this particular company that you are auditing, let's say you are getting the number somewhere down the line, let's say 300 per square feet. That means they are not utilizing the space that efficient the way the other companies within the same industry are. Number one. Number two, or the sales is not directly related to the area which of the store. So sales is dependent on some other factors, maybe marketing, maybe promotion, maybe price. Okay, so that is the one scenario where you need to understand which are the elements on which sale is dependent. Reason because based on that you will able to understand whether the sale increase in the current year is because of the increase or decrease in the factors on which the sale was dependent, or it is because of some other thing. Based on that you will be able to analyze, you will be able to do analysis that is there any risk of material misstatement in sale? Is it something unusual in the sale? For example, let's say in this particular example, I'll change the number. Instead of 300, let's say the number is 900. The company you are auditing, 900. Now last year, okay, square feet sales. Current year, square feet sales. Let's say last year the total square feet was hypothetical number I'm giving to you, 1.2 lakh square feet. Okay, and the sales in front of that was 250 crores. In current year, the square feet has marginally increased. For example, 1.25 lakh means only 5,000 square feet was added to their overall area. But the sale instead of 250, now we can say it is 400 crores. See, now by doing this analytics, you can understand the sale is no longer more dependent on the square feet, or there is something unusual in the sales. So you will go and do further analytical procedures to understand why sale has increased. What was the reason behind increase of a sale? Is it a related party transaction? Is it something, just to increase the just to increase the numbers in my books, to make my books very good? Fictitious sales so that I can show good profits. I can pump up my, stock price in the market. Or is it the actual sale increase? Is it a fraud involved? That sale, let's say, for example, after doing analytics, you identify in the current year you have 300 crore sale to related party, and only 100 crore basically is to non-related. Last year 250 was 50 to related party and 200 to non-related. So now the sale to non-related party has decreased. That's a concern. So they might be doing some more, there are chances that there is a related party, there is a chance of fraud. Remember, presumed risk of fraud. So by this way, doing an analytical with respect to the selling space, volumes, non-financial related analyticals, you can get some idea about the risk assessment. You can get an idea about the risk which is present. At least you can get some direction. So analytical procedures may help identify the existence of unusual transactions, events, amount, ratios, trends that might indicate matters that have audit implication. For example, sale to related party. Unusual, unexpected relationships that are identified may assist the auditor in identifying risk of material misstatement, especially risk of material misstatement due to fraud. Classic example that we just now discussed. We discussed about an example where they have increased the sale to related party from 50 to 300 crores. However, when such analytical procedures use data aggregated at high level, okay, the results of those analytical procedures only provide a broad initial indication about whether a material misstatement exists. Accordingly, in such case, consideration of other information that has been gathered when identifying the risk of material misstatement together with the results of analytical procedures may help you understand further. For example, this increase in sale but not increase in square foot was not sufficient for me. When I went ahead and when I did more analytical procedures, more understanding, I identified the mix of the sale to related party to non-related party. In a similar way, okay, that analytical procedures with the other information will give you the results that will be able to, that will help you to understand things more appropriately. Okay. So hence in the current case, Mr. Mukund can perform analytical procedures during risk assessment process. However, when such analytical procedures use data at aggregated high level, other information gathered during the risk assessment process shall be used to corroborate the conclusion of the analytical procedures. Clear? Any doubt with this? Any doubt? Okay. If no doubts, let's proceed to a next question. See, we have to discuss a lot of questions. Reason because then only you will be able to write the answer in the exam. See how we are writing the answer here. Also in this, what we did, we started with the provision itself or the standard itself. So here you have a reference of the standard first. Then we discussed about the topic, like what is the matter which is there in the question, and then we elaborated more on that. Okay. And then the conclusion. So this is how you can write the answer. But when it comes to this question, let's say it is of 5 marks, at least you need 5 to 6 points. 1, 2, 3, 4, 5. So something 5 to 6 points you require when you are writing an answer for 4 to 5 marks. Okay. And second thing you need to focus upon when you are writing the answer, few terms, key terms that you should not change. For example, if I'm highlighting a key important terms for you, let's say risk of material misstatement at financial statement and assertion level. You should write risk of material misstatement at financial statement and assertion level rather than you writing the risk in the financial statement, risk in the assertions. Okay, that should not be the correct way. Then, whenever you are writing an answer, make sure you do not change the term. For example, over here, this one, when I'm writing the answer, I have a name of standard, this one. Then, if I'm writing the name of the standard, it should be the way the name of standard it is. I should not write like SA 315, understanding the entity and its environment. No. Whatever the proper name is, you need to mention that proper name. So proper name, proper terms, flow of the answer, that is something you need to maintain in your answer. Okay. Now, some people might write fraud risk. Some students might write, okay, fraud. So directly writing fraud or fraud risk is not appropriate. You need to write risk of material misstatement due to fraud. If you know more, you can quote on the SA 240, provided you have the time or the question is relevant to that. Otherwise, whatever is relevant, you need to write in that way. Okay. And within the given time frame and the, you can say, length. It should not be the case you should start writing essay. No. If you will write essay, you will not be able to complete the paper on time. So make sure you should write what is relevant within the given length, 5 to 6 points. Okay. Do not write essay. Mention the keywords, the words or the terms which should be kept as it is, and then write in a flow. Okay, write in a flow of the answer. For example, over here, we are talking about, let's say, risk assessment and analytical procedures. So first I explained SA 315, where I concluded that okay, risk assessment procedures shall include analytical procedures. Fine. Then I explained why it should include the analytical procedures. Why? It explained why the analytical procedures are important. Again, importance of analytical procedure further explained over here. Then comes the very important part here about the data. Base data is still unaudited. So I have to write something on the base data. That is the main question. So now I will shift to the base data part. However, when analytical procedures use data integrated at a high level. So first I explained them the importance of the analytical procedure. Then I shifted my answer to the data, which is the main part. I explained about the data and then I gave the conclusion. This is how the flow should be there. Explain the topic. First, quote the standard, whatever relevant provision. Explain more about the topic or the main key term or the concept which is there. Answer the question which is there, like whatever the main point in the question it is. Answer about them and then conclude. Okay, let's take up one more question for the discussion so that we can understand about writing the answer. Mr. Subramanian, the engagement partner, performed the risk assessment with the audit manager for the statutory audit of Ocean Waters and Beverages Limited. Once the risk assessment was done, the engagement partner and the audit manager identified the high and medium risk areas and developed an audit plan to address those risks. For low risk areas, the audit manager delegated the responsibility to other key engagement team members for preparing an appropriate audit plan to respond to such low risk areas. Once the entire audit plan was ready, the engagement partner informed everyone about the applicable financial reporting framework, which is applicable to the entity. Mr. Shashank, one of the audit executives, requested the audit partner to share methodology and the process followed by the engagement partner and the manager to identify high medium risk areas. However, the engagement partner was of the opinion that the identification and assessment of the risk is a very complex and challenging process. The procedure followed and the assumptions taken during the risk assessment are required to be kept confidential. Comment on this in the light of standards on auditing issued by ICAI. Read the question, take a minute, and then try to answer. Read the question, take a minute, and then try to answer. Okay, tell me. So, what do you think? If you have to comment on this, whatever the audit partner has done in this scenario, do you think it is appropriate? Or first of all, tell me what are the issues in this? What are the issues you see in this? Come on, quickly. What issues do you see in this particular process that is being followed? Anyone? This is very important because here you will understand what is not going as per the standard. What are the requirements of standard? That will be really, really important to understand what is going wrong. Otherwise, how will you answer this question? Issue is not involving team member in the risk assessment process. Yes, very good. Team members are not involved. What else? The engagement partner did not include the team members while planning and risk assessment. Absolutely correct. Yes. What else? Do you see any other issue in this? Okay, read the first paragraph and then tell me what is the issue. Like we'll go to the second paragraph afterwards. Let's tell me the issue in the first paragraph. What is the issue do you see in the first paragraph? Come on, guys. What issue do you see in the first paragraph? Because see, this is where your understanding about the topic will increase. This is what the relevant point is. Come on, quickly. What is the issue in the first paragraph? We will not go to second paragraph as of now. We will focus on the first paragraph. We will not focus on the second paragraph. We will focus on the first paragraph as of now. Very good, Sanjay. Absolutely correct. Very good, Sanjay. Anyone else? Mm, okay. Yes, Chitra. Good. Very good, Ayush. Absolutely correct. Okay. See, now here what is happening? First of all, understand. Once the risk assessment was done, okay, once the high and medium areas are identified, okay, then the low areas were delegated to other key engagement team members for preparing an appropriate audit plan. Once that was also done, then the engagement partner informed everyone about the applicable financial reporting framework. Here, the framework was reported later on. First, what was the scenario is they developed the plan, but that is incorrect. Reason because you need to develop first you need to inform them which is the financial reporting framework applicable to them. Then you will develop the areas. Are you getting the point? That is a very big problem over here. Plus, when you are doing the risk assessment, like for example, once the risk assessment was done, the engagement partner and the audit manager identified high and medium risk areas. What about the other team members? So, while delegating and planning the low risk areas to other team member, that is fine. They delegated it. But when they were discussing the high and medium risk areas, at that point in time, they were supposed to involve the team so that they can understand why it is high or medium risk area. Otherwise, how they will be able to understand what is high or medium risk area? Are you getting the point? So here they are not able to understand high and medium risk areas. They will not be able to understand high and medium risk areas. Okay. And the major incorrect part is telling the financial reporting framework after everything is done. Okay, so that was in the first paragraph. What is the issue in the second paragraph? What is the issue in the second paragraph? Anyone? What is the issue in the second paragraph? Take a minute, read again, and then tell me. No? No issues in the second paragraph? Everything fine? Very good, Sanjay. Yes, absolutely right. Absolutely correct. Very good, Chitra. So keeping the information confidential, that is nothing such confidential as we discussed. You need to provide that information to the team. Otherwise, how team will be able to understand that what was the risk assessment, how it was done, what factors were involved. Till the time you will not provide that information, no one is going to understand. There is no point of keeping confidential. Standard never says to keep it confidential. Okay, so as per SA 315, the engagement partner and the other key team members shall discuss the entity's susceptibility to the entity's financial statement to material misstatement. That is where the material misstatement can be. Now that should be based on the application of the financial reporting framework. Now, considering the financial reporting framework, you need to discuss all these areas. So you will discuss how and where the risk of material misstatement can be based on your financial reporting framework. Till the time you are not aware how financial statements are required to be prepared, which AS or NDS is required to be followed, how can you do the risk assessment? So the discussion among the team members provides an opportunity to them for more experienced team members, okay, to include the like to share their insights based on their knowledge of the entity. So experienced team members, including engagement partner, provides their insight on the entity, like what they think of the entity. So discussion among the team members allows the engagement team members to exchange information about the business risk. See, not everyone can do all the interviews. Today, I may do an interview of procurement department. My other team member will go and do a interview or inquiry with the sales department. But it will not be the case. Okay, I am doing all the interviews, then another team member again doing all the interviews to get the information. No. So whatever information I have received, I will share with the other team members. Okay. Then assist the engagement team members to gain a better understanding of the potential misstatement of the financial statement in specific areas which is assigned to them. Discussion about the nature, timing, and extent, and the decision about the nature, timing, and extent of the audit procedure. You discuss and then you take the decision. And then you communicate and share new information if you have received within the team. Also, SA 240 talks about, like SA 240 with respect to the fraud auditor's responsibility. It also talks about that no, you need to involve all team members. You need to inform all team members in the discussion. Then only they will be able to understand what is the basically the appropriate outcome. Otherwise, let's say I am doing the discussion with the audit manager. If my team has some important information, if that information is not shared, no point of having this discussion. Okay. In the current case, Engagement partner and the manager are not correct by not involving key engagement team members in discussion and then letting them know the financial reporting framework later on. Clear? Any doubt with this? Any doubt? Any doubt with respect to this area or the question that we discussed? No? Okay, great. Let's take one more question. KPL and company were appointed as a statutory auditor of Ocean Water Limited. Ocean Water Limited was a wholly owned subsidiary of Ocean Water and Beverages Limited. The appointment of statutory auditor was performed at the request and suggestions of the parent company. While understanding the entity and performing risk assessment procedures, the audit team decided to obtain the understanding of relevant industry, regulatory, and other external factors, including applicable financial reporting framework, nature of the entity, including its operation, its ownership, governance structure, type of investment the entity is making, and what the way the entity is structured and financed, the measurement and review of entities' financial performance. However, statutory auditor decided to scope out the understanding of entity selection and application of accounting policies, including the reason for change thereto and the objectives and strategies. This was done as the selection of application of accounting policy and objective and strategies are carried through the parent entity, and reviewing these at the parent entity will be sufficient. So you need to guide the auditor whether they are appropriate in their actions. You need to guide the auditor, that is the KPL and company, on this particular part. Read the question, take a minute, and then try to answer. Okay, take a minute, read the question, and then try to answer. So each and every point is relevant over here. So read carefully. Okay. So what do you think? Is there any problem in this? The approach they are adopting? Is there any problem in the approach that has been adopted by the KPL and company? Yes, no. Is there any problem in the approach adopted by the KPL company? Come on, guys, quickly. Pretty much important part because this will definitely enhance your understanding on the topic. What do you think? Is this here the accounting policies and strategies were left out? Reason because the subsidiary was following the parent accounting policy and the strategies. So they told like, okay, let the statutory auditor who is at the parent company will verify those accounting policies and strategies. no need to verify these at the subsidiary level. Is this approach appropriate? Yes, no. Okay. See, when it comes to the understanding the entity, okay, so there are few things that you need to understand. Like when you do a understanding of the entity, its environment, internal control, when you're performing the risk assessment procedures, okay, you want to do a risk assessment. For that, what you need to understand? You need to understand basically the relevant industry regulatory frameworks which are there. You need to understand the nature of entity, operations, ownership, governance structure, investment, group structure. Plus, you need to understand the accounting policies, strategies that they are adopting. Why? Reason because based on that, you will be able to understand whether the accounting policies are appropriate for this particular entity or not. Today, I can say, okay, this accounting policy is appropriate for this entity. It is so. Is it so? It might be appropriate for your group entity or the parent entity, but whether this is appropriate for the subsidiary entity, that you can only get information once you will verify. Just because the accounting policies are provided by the group entity, I shouldn't be relying blindly on them. I shouldn't be scoping out and I will say that okay, group auditor will review that. That is an incorrect approach. That is not an appropriate approach. Okay, so this scoping out is not appropriate. Okay, we have some options here. Go through the options and then we will discuss, like you tell me which is the correct option. We have discussed it. These are the options. Go through the options, take a minute and then tell me which is the correct option. This should be pretty easy now. After the discussion that we had, selecting one option would be easy for you. Come on, guys. This should be pretty easy. Trust me. Yes. Very good, Chitra. Absolutely correct. Very good, Sanjay. Okay. Okay. So let's read the options and then we'll select one. Option A. The auditor shall obtain an understanding of the entity's selection and application of accounting policies, including the reasons for the change thereto and the entity's objective and the strategies, though related to the businesses that may result in the risk of material misstatement. That we discussed the main point. Let's see the B, C, and D1 and what it includes. When the auditor is appointed at the request of the parent entity, then the auditor shall not obtain an understanding of the entity's selection and application of accounting policies. No, that is incorrect. We just now discussed. So that is incorrect. Then the entity conduct its business in the context of industry, regulatory, and other internal external factors. To respond to these factors, the entity's management or those charged with governance define objectives which are overall plans for the entity. Hence, it is the responsibility of the management to gather an understanding of the entity selection, application of accounting policies, including reason for changes thereto, and those related to the businesses that may result in the risk of material misstatement. What is the problem in this option? What is the problem in this option? Or this option is correct? What is the problem in this? Anyone? What is the problem in this option, basically? Oops, I think it is. Do you see any problem in this option? Very good, Chitra. Yes. Okay, Ayushi. Ayush, sorry. See here in this particular scenario, okay, in this particular scenario, what is happening is we are talking about management's responsibility. If you see what it says that management is responsible to gather the understanding, which is not correct. The responsibilities of auditor, not management. Management is the one who will define the accounting policies. Why they need to gather the understanding? They are the ones who are the ones to for deciding this one accounting policies and everything. That's why it's incorrect. Management is not management is not required to gather an understanding. They have the understanding. They need to provide us the understanding. That's why incorrect. And the D1. Business risk is broader than the risk of material misstatement of the financial statement, though it includes the later. Business risk may arise from the change in complexity. Hence, the auditor should not focus on the entity's selection of application of accounting policies and the reasons of changes there too. Now, we have already discussed. Auditor has to focus. So D is also incorrect. So the correct option is A. Clear with this? Clear with this? Any doubt? Any doubt? Okay, let's take one good question. Something different it is. Okay, but again, it will give you a good understanding of the topic. You are the engagement partner at PQR Associate, appointed as the statutory auditor of Nexus Electronic Limited for the financial year 24-25. NEL specializes in the manufacturing high-end consumer electronics and has recently experienced significant changes in its operating environments. During the planning phase, your team has gathered the following information through preliminary discussions and review of documents. This is the information that has been gathered. New ERP system. NEL implemented a complex customized enterprise resource planning system S/4HANA across all its functions, including finance, inventory, production, effective from 1st April 2024. The previous legacy system was decommissioned immediately after migration. The transition faced several challenges, including issue with data migration and initial user resistance. Second, the consumer electronic industry is highly competitive and subject to rapid technological change. NEL is facing pressures on margin due to increased cost and specialized components sourced primarily from two suppliers in Southeast Asia. Third, NEL recently acquired a smaller competitor, Sparks Component Private Limited, to secure its supply chain. The acquisition was financed through a substantial term loan from consortium of banks, which includes stringent debt covenants related to debt equity and interest coverage ratios. Inventory valuation. NEL uses a complex method for valuing its inventory, particularly work in progress and finished goods, which involves significant estimation regarding the obsolescence and NRV due to their short product life cycle. Now we will see the question. In accordance with SA 315, okay, describe the specific risk assessment procedures PQR and associate should perform to understand the to obtain the understanding of the NEL and its environment, including its internal control. So, what are the specific risk assessment procedures you need to perform to obtain the understanding of the entity? This is the information which is given. I'll just bit a zoom out. So, read the question, take a minute, and then try to answer. What procedures you will perform? Come on, guys. What procedures you will perform? Take a minute, read the question, and then try to answer. Very interesting question. Trust me, it will really improve your understanding of the topic. Quickly, guys. So, what is the thing or what are the procedures that you will perform in this particular scenario? As per SA 315, what are those procedures? Come on, quickly. No? No one? Generally, let's say, for example, forget this scenario. Let's say you have been given a task to understand the entity before you proceed for the auditing. What procedures you will perform? What procedures you will perform before proceeding for the audit? Like you want to understand the entity, simple, nothing difficult in this. So, if I was on your place, what I'll do is I'll understand the entity first of all by performing inquiries with the management. First of all, simple inquiries with the management. Management, tell me what you do. What is your business? How do you operate? Where, like, about the ERP, about the systems, about the business, everything. I will inquire with the management. I will inquire with those charged with governance. I will inquire with the finance team. Yes or no? I will do inquiry with various people that we have already discussed. What else you will do? Okay, one inquiry I told you. Then next, what you will do after inquiry? Let's say we did the inquiry of management, of appropriate individuals within the internal audit function, of others in the entity who may have the information that is relevant for us. You will understand what are the internal controls. Yes, very good. What else? What else you will do to understand the entity? Very good, Sanjay. Yes, I will do inspection of the documents. For example, in this scenario, I will go and read the documents. For example, the loan agreement which will be there between the bank and the entity, the consortium banks and the entity, the loan agreement, the like acquisition agreement, if there is any, shareholders agreement, if there is any, between the company and the new, okay, merger and amalgamation scheme. Then I will read about the what are the critical contracts for the company with respect to the new ERP, with respect to the expansion, financing, a lot of things. So I will do inspection of these documents. I will do observation how the team and how the entity is recording the transactions. In case of how the team or entity is using the ERP, how they are performing the inventory valuation. So inspection and observation. What else? You will mark few areas, high and low, medium risk. But before marking the areas, you will do something. What is something that you will do to understand the entity? Inquiry, inspection, observation. What else? Just now we discussed one such procedure. A few minutes ago, we discussed about that procedure. We will do that at the time of risk assessment. What was that? Come on, quickly. One important procedure that we discussed that will give us a good understanding about the information. What was that? Analytical procedures. Very good. Yes, analytical procedures. I will perform analytical procedures. For example, if there is a ERP, new ERP, okay, how many users were earlier? How many users are now? I will perform the finance. See, now here you have the expansion in financial, which is based on the debt equity ratio, coverage ratio. I will perform the ratio analysis. Okay. Then industry dynamics. The company is facing pressure on the margins. I will perform the margin analysis. I will perform various kind of analytical procedures. Inventory turnover ratio. Inventory valuation is critical. So I may look into inventory ratios to understand how critical the inventory is. What is the valuation of inventory coming year on year? Inventory, how the inventory turnover is working. A lot of ratio analysis will be done to give me an overall direction. So I will perform analytical procedures, I will perform inquiry, I will perform inspection and observation. Are you getting the point? So, as per SA 315, okay, the following are the risk assessment procedures that will be performed. Inquiries of management and others, like finance team, management, IT personnel, procurement and operational staff, internal audit function, if any. Then analytical procedures, comparing current financial performance, analyzing key ratios, analyzing inventory turnover ratios, inspection and observation, which include key documents, for example, purchase price allocations, uh, covenants, like acquisition, board minutes, a lot of things. Then observe the inventory management process, how the inventory valuations are done. Walkthroughs will be performed of significant transaction cycles, revenue, procurement, a lot of things will be done. So these are the things, or these are the methods that I will use to obtain the understanding of the entity. Clear? Any doubt with this part? Any doubt with the question number one, that is, describe the specific risk assessment procedures that will be performed to obtain the understanding of the entity. Question number two, trust me, it is not that easy, but if you have paid attention to whatever we have discussed till now in both of the sessions, you will be able to answer. And if you answered this particular question, question number two, trust me, you are fully clear on the topic then. The question two is, identify and explain at least four potential risk of material misstatement at the financial statement level and the assertion level arising from the scenario. You need to give me four risk of material misstatement at the financial statement level and the assertion level. See, financial statement level, pretty easy, but at the assertion level, that is very important. If you gave me the example of four risks at the assertion level, risk of material misstatement, that means you understand the topic now to a very good extent. you need to provide me risk of material misstatement at the assertion level. 4 examples. I will say 3 are also fine. Come on. 3 are also fine, but if you can, then try for 4. Very good, Ayush. So, risk of accuracy and completeness of the data during migration. So, at the accuracy and the completeness level for the data at the time of migration, one is that risk. What else? So, I have one answer which is very good, risk of accuracy and completeness. So, I will say accuracy and completeness of data because of the migration issues that were there. Very good. What else? Come on, quickly. Which is the second risk you can see, risk of material misstatement, given this scenario? One is very easy, trust me. Out of this, I will say two. Two are very easy, pretty much very easy. You can easily give two more. Can I say inventory with respect to valuation? The valuation of inventory is incorrect or inappropriate. So inventory valuation at the valuation assertion. Yes or no? Inventory at the valuation assertion. So valuation will be incorrect for the inventory. That will be one of the risk. Yes or no? What is next? Okay, I gave you one more. I have given one easy one, inventory. There is one more easy. The third one I will be giving you at the financial statement level. See, the third risk is at the financial statement level, which is highly competitive market, margins, pressure, okay, in stringent debt covenants, debt equity, interest coverage ratios. These all are pointing towards management override of controls, presumed risk of fraud, because there is a pressure on the management. There is a pressure to maintain the margins. There is a pressure to maintain the covenants of the debt agreement, debt equity ratio, interest coverage ratios. That's why I would say there is a risk of management override of controls. Yes or no? So, risk of management override of controls, very important. Inventory valuation, again important. Plus, I have involved estimation. Again, if you say estimation, there is a management biasness. Remember, estimation uncertainty. So, there is a risk of estimation uncertainty. This will result not only inventory valuation issues, but it will also, because see, as of now, inventory valuation involves work in progress, finished goods, which involves significant estimation. If I have an incorrect valuation, it will also involve my COGS. So estimation uncertainty will not only impact inventory valuation, but also the accuracy for COGS. So these are the certain risks you can, just by looking at this, you can say, okay, I see there is a risk on this. Clear? Any doubt with this? Any doubt? I hope this question would have helped you to understand the topic in much more detail. See, the question was designed where you have to think, where you have to, think about the risk assessment process. Any doubt with respect to the any of the part that we have discussed till now? Yes, no. Okay. So if no further doubts, we have completed your chapter number 4. Okay. We have completed the chapter number 4 basically. So I will take you to the chapter number 4. We will quickly go through again for the rest of the part. That is, see, we discussed about the internal control framework for internal control, where we discussed about the OSO framework. We discussed about the guidance node on IFCFR. We discussed about the various, criteria of control. There could be multiple criteria of control. There is a COBIT. Then we discussed about the Surveillance and Octane Act, section 404. Okay. And then you have some questions given below. This theoretical questions. I want that you guys should go and practice these theoretical questions. Okay. Practice this. Write your own answers first, and then you go and check the answer with the given answer. Number two, read the chapter in detail. Okay, read this whole chapter in detail. It's very, very important. Then only you will be able to understand what we have discussed. See, there is no alternative of reading and practice. So your reading is required. Plus, you are already 15 questions in this. 15 plus a lot of things are there. You have a 15 questions in this. Practice all these questions. Write your own answers. Compare the keywords. Are you deviating from the keywords? Read. You have been given this scanner. So read essay 315, essay 320. We have I also discussed in the lecture essay 315. We have gone through and the 320. But you have also read. You also are required to read. Okay. So read these standards, read the chapter, practice, and bring up your doubts if you have any in the next session. So if I talk about our next session, just a minute. So our next section is on 17, that is Wednesday, where we will be starting chapter number 5, audit evidence. Very important. Now, from chapter number 5, we will be entering into the phase of the audit execution, collection of audit evidence. That is the sufficient and appropriate audit evidence. Remember, we need sufficient and appropriate audit evidence for the purpose of issuing opinion. Now, from chapter number 5, we will focus on collecting that sufficient and appropriate audit evidence. I want you guys to read chapter number 5 when we'll start discussion on Wednesday. Before that, read chapter number 5 so that when we discuss the various standard in SA 500 series or various things on the audit evidence, you should be aware what we are discussing and bring up your doubts for that. Okay? Any questions, any doubt till now on whatever we have discussed? Any questions? Okay, if no doubts, then thank you guys. Thank you for participating in today's session. Uh, we keep the session till here. Thank you very much. I'll see you in the next session. Yes, sir.